their director of research, Ben Silverman, is joining us now here on Street Smart. Ben, great to have you. Always interesting to see what executives are doing. Talk to me about how you track the data. It seems like it was back in August, but you actually insiders can't be purchasing right around earnings.
Right. So right now in the period, we're in what we call a quiet period right now. Most companies before about 10 days before the end of the quarter, they'll shut the trading window. So insiders won't be able to buy or sell until earnings are announced. And that's simply because they're obviously, the insiders are in possession of material, non-public information.
And how did this latest period in August, rate relative to what you've seen over the last few decades?
So this is one of the highest periods of insider buying in the last 30 years, and that's by measure of the number of insiders purchasing shares, the dollar flows going into stocks, and the number of companies experiencing insider buying. Previous periods when we saw such type of activity was March of '09 when we actually had a market bottom, November of '08 when we had a false market bottom, and then following the '87 crash.
And there are two companies that sort of stood out to you. I think one's very appropriate for the time we're in at the moment, Morgan Stanley.
Yeah, Morgan Stanley saw some very interesting insider buying in early August. It was what we call a cluster buy, which is when we get 3 or more executives buying stock. And we saw Jim Gorman, the CEO of the company, lead the way, bought over $2 million in shares. And what was interesting about this was obviously some of the timing. The market was tumbling at the time. Concerns about banks, as there seem to always be these days. And Gorman has been at the company since 2006, and he's been CEO since January of 2010. Yet this is when he decided to make his first purchase. So he made this decision to buy at apparently what he thought was a fair valuation, but the stock has not performed well since then. The good news is insiders are long-term focused, so in 2 years he may look very smart with the buy.
All right, and then NVIDIA was another company you were looking at.
Yeah, so this was more recent. This was in the last week. We saw a director named Brooks Sewell, has been with on the board for a number of years, pop up, and he actually made the first purchase at the company by an insider since 2004. It was over $1 million, and we just, while it's a quiet period for many companies, obviously it's not for NVIDIA, and this is sort of a continuation of what we saw during the actual calendar third quarter, is this type of buying where we see long stretches at a company and suddenly somebody pops up with a buy where there had been no buying before. A lot of sales at tech companies typically. So a very interesting purchase here.
And Ben, is there any way to connect sort of the dots or bring a causal relationship between seeing insiders, what they're doing, and a market rally? You mentioned the last time we had periods this high was one during a real market bottom in 2009, and one was during a false bottom in 2008.
Right. So if we go back to the beginning of 2004, and we go back there because that's when our entire data set goes back, we look and there's been about 14 periods where we've had extremely aggressive insider buying. 12 of those times, insiders have actually called a bottom. So, that's a very high rate in terms of making the right call. And we haven't had in the last 30 years a market bottom absent of aggressive insider buying. So when valuations dip, the insiders do come out and they're typically right. Now, it may take a little while for that to pan out. Again, they're long-term focused. So, but if we go back to March of '09 and the valuations they were buying out then, and even November of '08 at the false bottom, you've got a lot of people sitting on huge gains, and and they were buying and they were insiders.
Ben, I'm going to ask you the reverse question here. I don't know if you track the insider selling, and I don't quite know. I imagine at some point these guys become so concentrated in their own companies, they want to diversify some of their own exposure, just because it's common sense. Any trends that you're seeing there?
Yeah, the trending in insider selling is that we've got below normal selling. In fact, right now during this slower period, we typically have a sales bias, but we actually have a buy bias right now. And during the third quarter, we saw insider selling dip to very low levels, close to this record low levels that we saw in March of '09. Insiders get pushed to the sidelines. They just other investors. They don't want to sell too low. Now, we did see a lot of buying before, the market, made it, or a lot of selling, I apologize, before the market turned down in August. So the insiders were taking money off the table fairly aggressively heading into that market downturn.
And then quickly, Ben, when is the next period when the window is open for a lot of insider activity?
So basically, first week of November, as soon as the earnings reports start rolling in, the windows open. Typically, anywhere from a day to 3 days after a company reports earnings, the company will open windows. And it's a very important time following earnings to see if insiders step up to support their stocks or if they sell on strength following a good earnings report. So, heading into earnings, we want to look at what happened during Q3 to see who was buying aggressively, and immediately after earnings, we want to look at and see, hey, who's buying to either support a broken stock or who's selling into strength.
All right, Ben, we're going to have to check in with you then another couple of weeks. Appreciate your insight. Thanks for joining us today. That was
Thank you for having me.
Ben Silverman, Director of Research at InsiderScore.com, coming to us from his office in Seattle, Washington. Okay.